Hello, I'm Paul Pfeiffer, CFO of Anderson Trucking Service. We're a little more than halfway through 2025, and we're more than 3 years into a freight recession that was triggered by depressed economic demand against too high of a truck count. This isn't the worst freight recession that we've been in, but it is the longest. And if you might recall my video on the truckload transportation industry that kicked off the year, my expectations were that the health of our industry would bounce along the bottom for several months and then be followed by some gradual rate increases that would be welcome to carriers and drivers. Well, as I look back on the first 6 months of the year, that's exactly what's played out. So what's going to happen in the second half of the year? That's what we're here to talk about. Whether you're a shipper, a carrier, or a driver trying to make smart, cost-effective decisions for your business, the answer to that question is critical. So in this mid-year review of the truckload transportation industry, I'm going to hit on some economic information, I'll hit on some industry information, and then I'll talk about the expectations that I have as we go into the second half of the year. First, let's start with the concept of uncertainty. I wonder if we ran an internet search for the most used terms in the last 12 months, whether uncertainty would land somewhere near the top. My guess, probably be number 2, right behind AI. It's a term that I've heard a lot. I've even used it myself a couple of times. Mostly, I've heard it when talking about the US economy and the related tariff lever that the current administration is using to renegotiate trade deals. Well, look, there's a lot of things that are still unsettled. I'd like to pivot and talk about some of the certainty that's starting to creep in and potentially even create a little, dare I say, optimism. So if we first look at the uncertainty, I think it was probably a little overstated in terms of the impacts that it was going to have. Unemployment has stayed pretty stable, much better than we thought it was. Inflation has not gone and spiraled out of control. And then when I look at the overall growth of the US economy, on a first half of the year basis, we grew about 1.2%. Now, we contracted a half point in the first quarter, but we followed that up with 3% growth in Q2. And so let me talk about those certainty items rather than the uncertainty items that I'm seeing. The first is related to the overall resilience of our nation's economy. Even with a slowing economy, we're still one of the strongest from a global standpoint, and it's because we have two really important components to our economy. We have a very strong consumption base and we have a very strong production base. Those two position us well on the world stage. The second thing that I'm going to talk about from a certainty standpoint is that both individuals and corporations alike received a huge dose of certainty when the One Big Beautiful Bill Act was signed into law in July, because that act made the tax cuts from the Tax Cuts and Jobs Act of 2017 permanent. So if many of us were planning on having to set some cash aside to pay for increased taxes, that tax bill is not going up. The rates are going to stay the same. And now maybe we can even use some of those funds for investment. The third area that I'm looking at is the stock market performance. You should never, ever look at the stock market as a gauge of the health of an economy. You can look at it as an indicator of sentiment from both investors and companies alike. Well, what's been happening with the market over the last 3 months? It's pretty clear to me that the market's telling us that there was only one trade deal that actually mattered, and that was the deal with China. Now look, we've got maybe a framework in place and some negotiations happening with China, but we all know the story. It's far from over. At some point, China will get up, walk away from the table. They'll come back. We'll get upset about something, walk away from the table, we'll come back. But at least the conversations are ongoing. And is it possible that the negotiations fall apart and then that leads us to a spot where the economic downturn and the freight recession are prolonged even further? Sure, that's possible. So let's talk about the 4 things that I'm looking for in the second half of the year. The first one, unfortunately, is I do expect the labor market to weaken further. And what that's going to do is that's going to lower consumer spending, and then that's going to further depress the already low level of economic demand that we have to move freight around the country. Now, the second thing is, to potentially offset that, is what the Federal Reserve is going to do. And I'm hopeful that they will act more quickly as we're coming out of this freight recession than they did when we were entering it. If they do start to bring down rates, at least there's a chance of creating a little bit of economic activity to push demand back up. They had that opportunity in their July meeting and they passed on it. So all eyes are now focused on the mid-September meeting of the Fed to see if rate cuts happen there. But there is an expectation that there is 1 or 2 rate cuts before the end of the year. The third area that I'm looking at is related to our industry specifically. The administration is cracking down on illegal, or what I would call hidden capacity in our industry. And that hidden capacity is pushing rates and keeping rates down. That hidden capacity comes in a couple of forms: fake CDLs or B1 visa drivers that are violating cabotage rules in the US. So regardless of what happens in those first 3 areas, the fourth area that I'm looking at is what's happening with rates. As I said earlier, we've seen some slow and gradual increases in rates in the first half, and I expect that to continue in the second half as well. The reason I expect it to continue is that whether you're a carrier or a driver, you've continued to see the cost increases, whether that's in the equipment, the maintenance, insurance. And so they're at a point where they can no longer take on any additional rate reductions, and the rates need to start moving up in alignment with or ahead of where the costs are moving. How's that being done? Well, carriers, as an example, are looking at 2 parts of their portfolio. They're looking at the asset side of the portfolio and the customer side of the portfolio. From an asset standpoint, right, truck counts are coming down. They're looking for cost reduction through improved truck utilization. And then on the other side, they're culling out and removing the low-priced freight that they have in their network. And I expect those things will continue through the balance of the year and keep slowly and gradually pushing up the rates. So in conclusion, understanding your current environment is always key to making well-informed, cost-effective supply chain decisions. At Anderson Trucking Service, for over 70 years, we've been moving freight through strong markets, through recessionary markets, and everything in between. And all that experience puts us in a position to understand the long-term view of how markets move and helps us identify when major shifts are going to happen. Hope this was helpful. Have a great second half of 2025, and as always, be safe.